look, first and foremost, I'm the Godfather. That is not a self-appointed name, by the way, so it does make me cringe a little bit. But when I set this up, my alias was just MDB because I was on Discord and we were doing loads of work to set the project up, and then we did a bit of a vote for fun, for people to vote for my alias until I docs, and the winning vote was $1 Million Daddy. And yeah, it was. I just couldn't do it. I couldn't do it. And there was this. I said I kept saying to our marketing lead, I kept saying I cannot have people calling me daddy. It's just too creepy. And and actually, so it was a Sunday, and I remember she messaged me and she said, "This is our CMO, Mina," and she said, "You have until the end of today to decide on a name, and it can't be MDB anymore because people don't know the difference between you and the project." So I'm a big fan of the Godfather films actually, and I thought it's a play right on Daddy, so it's kind of giving a bit. I still got loads of slack. People were like it was meant to be Daddy, so I had to kind of fight FUD on just my name, and yeah, so that's why it's the Godfather, and I know it's only temporary because I will docs, and then and then I'll be me. So yeah, that's the reason for the name. Background about the team. So it's a mature team. Youngest member in our team is 30. Oldest member in our team's just turning 40, albeit that was kind of the starting team. We've expanded the team now, so we've got we have a community manager, a fantastic guy called Syrian. We have head of gravity, which we can talk about in a bit, which is a sort of a philanthropic project really, where we use the goodness of MDB to absorb other projects and just help rescue projects basically. And we also have Apex as well, who's our he's our Millionaires Club manager, which again, I'm dropping these words in so you will say, okay, well, what's that? And it'll drive the conversation. And yeah, even those guys, actually, everybody that's coming to the team is relatively mature. Most of the core team have children or children on the way, with lots of sort of years of business investment experience, lots of experience actually around crypto as well, but we haven't run projects before actually. So we then got sort of a backing technical team. Lead technical people have run other projects that have their successes and have their own public profiles actually, yeah, so it's a slightly different mix, I suppose, to what you normally see in crypto. And to kind of give you the background, I suppose. Well, I don't know. Do you want me to give you the background, or would you like to ask any more questions about the team?
Yeah, you can go right into backgrounds too.
Yeah, so look, in terms of the background of where the project came from, I suppose as a human, as an investor, I look on at what's going on in crypto, and it makes me really sad if I'm completely honest. I think, and having now been in the industry for a while as an investor, and now going through the process of running this project and building what's actually a fantastic community, I'm probably even more sad today than I was 6 weeks ago, if I'm completely honest. When you see behind the curtain, you see kind of what goes on in the industry, and really what MDB was about. The reason $1 Million Baby is meant to be like a bit of bright light, so because we've all got a bit of degen in us, especially if you're a man, we never grow up. But also MDB stands for Make DeFi Better. Yeah, and I suppose for me, I've been through all these experiences in crypto, and I like working out a puzzle, and I just kept trying to work out this puzzle, and I kept coming up against these cul-de-sacs, and and at the end of that, really, the culmination of all of that thought and process was MDB, which was something that helps. If you watch something, I had a conversation with Austin's here actually, and I had a conversation with Austin earlier today actually, and I was saying that if you see a project 100x and then come back 99%, then ultimately, if you could run a report and look at the wallets that made money and you look at the wallets that lost money, there will be a very few amount of wallets that made money, and they have made huge amounts of money. And on the right hand side, you would, assuming the other was the left, you would see a huge amount of wallets that have lost money, and that's people getting hurt. And ultimately, the reason for that is because that is the game. It's Ponzonomics, right? Bots are trying to beat flippers. Flippers are trying to beat early buyers. Early buyers are trying to beat long-term holders. At the end of it, people are just getting screwed left, right, and centre. And so MDB really was, the culmination of all of that. What I wanted to do was design a system that could do some good in this space, that would be sustainable, and regardless of what anyone did, so if someone wants to come in as a whale and put $250,000 into our protocol, it's going to cause like some mega spike because our liquidity pool is relatively small. Then if they wanted to exit the next day, the people that are left would be in a much better place. And that's really what MDB is. So I suppose the structure of us as a token is that we have a fixed supply that's depreciating. Already we only launched on Friday night and we've already burned 1.1%. That's organic burns, by the way. That's not us holding some supply and then sending it to the burn wallet because it's good marketing. That is, organic burns from the process working. And so the idea is that we went to the market, we raised somewhere in the region of about $1.8 million, and we then split that. We call it capital synergy into 5 parts trust fund, 1 part liquidity. Now the trust fund is invested across 3 different risk profiles, 10% high risk, but we also leverage socioeconomics with that. So we might put, our most retweeted tweet is by Brian from SafeFood, because we put $30,000 into SafeFood. Messaged Brian, said, Brian, I'm going to invest in you. Would you retweet if we invest in you? That $30,000 has paid for itself a long time ago, right? So really, there's a play there in terms of that 10%, but also we obviously want that to make money as well. But we accept that that's a relatively high risk part of the portfolio, and then there's 20% which is medium risk, obviously a balance of risk and reward, and then there's 70% which is low risk. We've got a large amount of that is in things that cannot depreciate today. It's always bittersweet. So when you see BNB crash, part of me is like, what? Because it hurts the chart, and we all need BNB to buy our token. But at the end of the day, I also know we've got over $500,000 in things that appreciate and are backed by stable. So that's kind of how our investments sit. Now, basically, what we do is we then use the interest and the taxes. So that all gets coupled into the trust fund. So that trust fund is always growing, and then we use the interest, and we have something called the Phoenix. So when the Phoenix is hungry, the Phoenix wants to buy as much supply as she possibly can, and she'll come out and she'll hawk and she'll buy supply. And because the trust fund is so much bigger than the liquidity pool, it creates this mathematical scenario where matter what happened, we will grow as a now there could be some huge existential risk if we were completely incompetent as a team, didn't stick to the investment playbook, then that obviously would be a risk. But assuming that we execute exactly as per the playbook, and crypto doesn't go down 99% as a whole, because there's a lot of crypto investments there, where even so we've got such a large amount of stable, we'd probably still outperform the market actually. But ultimately, those mathematical mechanics are what ensures long-term growth, because basically, in very simple terms, we have an appreciating fund and a depreciating supply. But other depreciating tokens have an issue where when they grow, then they don't burn as much. Whereas with us, there's a peg between the trust fund and your growth because of the taxes, and because the trust fund is so much bigger than the liquidity at the very start. It means that we can't be crashed, and if somebody did like a 90% sell-off, then the people that stayed behind would be better off long term because the amount of supply that could be bought. So that's MDB, the team, and kind of what we're about.
Yeah, definitely a great overview. It's an interesting concept that is new to the DeFi space for sure. So I guess my question is, so the treasury, right, the trust fund that has
Trust fund,
those investments that continue to produce a yield, those go into buybacks, correct? Or is that just kind of build into itself?
both
Both.
actually, and because the trust fund and the Phoenix work together to, what do they want to do? They want to grow and they want to accumulate supply, which is then burned, right? And so, what we don't want is to support a pump because, sorry, let me take that back. We don't want an unsustainable pump. Yeah, if you times 10 in a week, unless you can just create this mega Ponzi, quite frankly, some people are going to lose a lot of money, right? So what do? You know, we times 10 in a week, they spend 50k a day on marketing. You times 10 again, they spend 100k a day on marketing. Eventually, you run out of marketing dollars. There's only, you know, there's a material sort of limit that you can get to, and then the crash is really painful and really hard for people. So the trust fund and the Phoenix are not going to work together to pump something that's already pumping, but it will be very hawkish when prices are relatively low. And actually, if you look at our chart, you'll see that there was massive volume at the start. We did a big raise. I think, quite frankly, there was a lot of people that planned to flip because they always do. There was a lot of hype around our token, and then you'll see that it's come down, and then it's dipped under launch price a few times, and then it keeps coming back. And it's teetering, even with the BNB sort of big drop today. BNB is depreciated probably 8% since our raise, actually. So you'll see that actually we're outperforming BNB. Yeah, so you've got this, you know, system where, you know, the way an AMM and the algorithmic curve works, which means that when we go down to like launch price, it's very hard to keep going down because we've only got 300k in starting liquidity. So the curve just flattens out really quickly. So it's really painful if you sell at that point. Plus, it's also quite a psychological barrier, and it's very easy for the Phoenix to pick up supply. If it goes a lot under that, Phoenix can pick up lots of supply. But the opposite is in effect in the other way. So if you got lots of buys, then it will move up the curve really quickly because of the small liquidity pool again. So the small liquidity pool, you know, effectively it's like raising. You know, we've got 1.9 plus. Maybe don't know with the sort of market conditions today, but around 1.9 million now across the liquidity and trust fund because it's growing, and ultimately you're in a position where you've got more than 80% of your value is basically vested and growing, and will only come into the liquidity to support sustainable growth. Does that make sense?
Yeah, that definitely makes sense. But with the small liquidity comes a pretty volatile price, as you probably have seen by now with your chart. And I'm not saying that's
Indeed.
necessarily a bad thing. That's a good opportunity for more volume to come in too. If somebody thinks that they can, swing trade it up and make,
Exactly.
quick buck. But what do you have plans in the future to kind of reinforce that liquidity, or does the high volatility kind of play into the whole ecosystem for the longevity of the project too?
It's a bit of both. It's a really good question, actually. It's actually a bit of both. So you kind of you don't want to be too degen at the same time. You don't want to be too sensible, right? Because there's a mix of customers or investors that you're sort of trying to attract. But yes, there will be lots of volatility, which offers trading opportunities on something that has relatively high taxes. Part of the roadmap, and we've every deadline that we've had so far, we've absolutely crushed it. We launched 2 weeks early. We raised more than we planned to raise, and actually we said there was a 3-month roadmap to add staking and bonds, so people could lock in supply if they don't fancy the roller coaster ride as it goes through higher lows and higher highs. Or the other one is we're launching, which is built on someone else's technology. I take no credit for the IP, but we're launching an algorithmic stable back token that can't depreciate in price. It has really small taxes and it can only go up in price. So we'll call that MDB plus, but it's powered by XUSD, and basically that can only go up. And the trust fund will use that as well, which will mean that grows at, considering it can't go down in price. I don't know, if I had to guess, it'll probably grow at sort of probably 2% a month, I would guess, in its early days, and maybe coming down a bit after that. But it can never depreciate from any price it goes to. So what we're creating is an ecosystem where, in the middle, you've got an opportunity to speculate if you wish, and we say if it's pumping, sell some, yeah, or sell all. It's up to you, really. It's your choice. It's your money. And if it dips really hard, that there's this fund backing it. It's so big, but don't miss the opportunity to buy the dip. So you could exploit the volatility. If you want to put your money away, we're going to offer a 60-day bond that'll offer a 10% return, actually. That's going to be announced fairly soon. We'll offer a 30 and 90-day staking pool as well, which will give returns in MDB, which has this really solid price floor. And then we'll have the algorithmic stable token where you can just keep your money if you like, knowing that it'll only ever go up very slowly. But you can also move in and out of that stable token, if you're deciding to kind of play the core MDB chart.
Yeah.
This all has a very interesting layout. So, as far as the like benefit of purchasing tokens, right? Is
Mhm.
there staking available right now? Is staking even in the plans, or is it more just based on the price of token? Whether it
No,
is
yeah,
pumping or dumping.
yeah. So there's two things that we're launching. So we have staking pools that are 30 and 90 days, and and they will earn a reward in the native token based on how long they're locked, and they'll also that will vary because there'll be unlocking fees within those pools that will also contribute to it. Yeah.
Okay.
The moment with by the way, so it's ridiculous really. We were close to, I think day before yesterday, we were close to our pre-sale price. At one point our liquidity was 600% backed. Um, like we're the most undervalued, and the problem is we've just launched some Watcher Guru stuff. We've got some Dextal banners just gone out. Someone says when marketing every 5 minutes in the Discord, but in reality, we want to have conversations with real investors, because if you realize that a chart in a token like ours is a temporary illusion, and you look at the fundamentals, which is how much the liquidity is backed and how much the supply is coming down. Um, then it's a fantastic investment opportunity. At the moment, we've come down slightly. I think we're only 550% backed at the moment.
Only.
Yeah.
That's it. That's really interesting. So it's almost so you guys are an interesting project because it's a little bit different. You have so many different avenues that you're kind of expanding into, not just the staking, but you also have longer stakes. So you said you had 30, 60, 90. Did you say 90?
Yeah, well,
Okay.
we'll have a 30/90, but we'll have a
30,
60-day
90.
bond. It'll be
Okay.
really limited. So the bond will be. So the plan is, just in case
Hmm.
we spot something we need to change it. Plan A at the moment for bonds are that there will be a 10 BNB and a 20 BNB bond released every day, just one of each per day. Um, and you can purchase that bond, and it locks the tokens that you purchase for 60 days, but you get a 10% return.
Okay. Gotcha. Interesting. You guys have a lot of different avenues, like I was saying. So it's almost like the way you first explained it just made me think of like a game, right? Where it's like, okay, buy, sell here,
That is part of
and
it.
it. So that's kind of the feeling I get when I hear you talking about it. So it's not the same as a lot of other projects that we've talked about, Zach, but it's more of like almost a little bit like a game and a little bit like, you kind of get to pick whether you're shooting on the short term, long term, whether you're buying, selling, trying to just hold for 30 days, 90 days even. It's
Yeah,
it's really interesting. I like all the different
yeah,
avenues you guys kind of bring to it.
exactly. And I think if you guys have traded any sort of commodities or anything like that, I'll probably liken it to trading a commodity because it's so heavily backed, the core token, that you never know when to sell oil, right? You know when to buy it. So when oil's in single digits, right, like it was at the start of the pandemic, it's an easy buy, right? People aren't going to stop using oil, so it's an easy buy. But knowing when to sell it's much harder. So I think with MDB, I think some people have a higher risk appetite and they'll push the limits of maybe where they would sell it. I think quite frankly, if you've got a low risk appetite, especially at the moment where I think maybe we've just gone under 3 again, so we're like, yeah, we're just under our launch price, with a 1.6 million trust fund backing 290k liquidity, um, and yeah, so you've kind of got, if you like, you've got speculative in the middle, which is core MDB. You've got savings on the left, which has you know which is the MDB Plus, where you can put your money temporarily, or you could leave it long term, but you get steady growth on it, and it cannot go down. Right, once it's gone up, it can never go back. That's the way the token works. Um, and then yeah, the staking is more maybe like a almost buying like wrapped bonds where you're doing a bit of speculating, because actually, especially at the moment, if we launched a bond right now, I suppose what you'd be hoping is that you could put in 20 BNB, and when you take it out, the price is times 5 plus 10%, and the tokens would be yeah, you basically get double bubble, in terms of sort of tokens in return, and growth of the token as well.
Yeah, definitely. Could you break down kind of where those transaction taxes go real quick on each buy and sell?
Yeah, yeah, no problem. Oh, you're testing me now. It's really difficult when you do this because I'm going back to the start now.
Yeah, sorry about about the late question.
Yeah. Yeah, no, it's fine. So the taxes are split 80-20. So 20% goes into marketing and operations, and then 80% goes back into the trust fund, um, which is then reinvested. Um, Now, when the Phoenix buys, then the Phoenix burns. So the so I'm pausing here because I'm really worried that I'll get it wrong. So the buy tax is 10%, and the sale tax is 15%.
Gotcha,
See
gotcha.
someone put their hand up. I don't know why. You don't get a memory block. Had a really busy afternoon. There's lots going on in our corner of the industry. So
I think we've all been
I
there.
got
We've
that
all
one.
been there. But I asked that question because it would lead it into this question I have now is
Sure.
obviously the more transactions or transactional volume that you have, the better off the protocol is in general, right? Do you have
Correct.
any plans then to kind of go cross chain for different opportunities with arbitrage or get listed on centralized exchanges to just drive up that volume?
Yeah, I think some exchanges have issues with taxes, and then others just have issues with any sort of rebase or I almost forget now because rebase has been such a big thing. Reflections, that was it, the old safe moon model. But yeah, so we don't have any rebasing or reflections. It's a limited and reducing supply, so that does offer us some options in terms of exchange listings. It's definitely an option, and the fact that we are accumulating our native token in pretty high volumes as well, then it gives us that pool really to work with an exchange as well. That's one of the pluses.
So
Yeah.
what is the total? So going back to like tokenomics, I know it's been a while, like you said, but going
Uh,
back to the original tokenomics. So how many tokens did you guys start with? How many have been burned so far?
yeah, so we only launched on Friday night. We started
Okay.
with 1 billion maximum supply,
Hmm.
and we've already burned 11 million.
Okay.
We've already burned
Gotcha.
1.1%.
1%. Yeah.
But across our marketing and we've only done one Phoenix buy actually. No, sorry, tell a lie. Up until today, because we've done quite a few smaller buys today. Up until today, we'd only money in our token where they thought they could just come in, pump and dump, and flip it, and it's a bit more sustainable than that. So yeah, we expect some people in the first week just been looking for exit liquidity, which is understandable, and the market's challenging. But that we comfortable that we'll start seeing a much better upward chain as we wash those people out.
Yeah, I like it.
Yeah, so sorry, I think we've got about another 5% of supply in, in,
Okay.
in, in wallets at the moment. Some of that needs to be airdropped out to people, and yeah, in addition to that, we've also got most of it is just then going to be burned.
Gotcha.
Okay. So is your big focus is one of them, I should say, because it sounded like you were talking about this at the beginning, but I just want to make sure I'm on the right page. So do you guys prioritize the longevity of the project over most things, or kind of where are you guys at with that? Like what is
Yeah,
the okay.
absolutely. And you've got there's this so mathematically there's this really perverse situation where actually, and I talked about this many times in AMAs before we started, but you still had
Hmm.
some hysteria when it wasn't like mooning straight off the bat. There's a really perverse situation where mathematically the best outcome is a huge dump because you have a massively reducing supply very quickly. The price returns from the trust fund buys, but now there's less in supply in less people's hands, and ultimately, I used the analogy earlier that it's like 20 people in a room and they've all got a ticket, and and that ticket offers them access to some money, which is split into two pots, a big pot and a big pot, but a big pot and a small pot. But every time they want to leave the club, they can only take the money out of the small pot, and they have to pay some of that money to the big pot. So ultimately, the big pot just keeps getting bigger, and the number, and then sometimes when people leave the club, their ticket is burned, so it can't be rebought by somebody else that wants to join the club. So over time, you don't have 20 people now with, say, $1 million. Now you've got 10 people with $2 million. Now you've got 5 people with $4 million, and it goes on and on and on like that. So you get this exponential growth curve. So actually, if lots of people left the club really quickly, it would appreciate the value of the tickets, and the big pot could buy more of the tickets, getting more tickets out of supply, and then having this exponential growth curve. So perversely, tough market conditions actually have a bigger growth curve later on.
So at what point, that brings up a question. At what point would like using your analogy, right? At what point would the people that, were left standing be actually able to reap any of the rewards from that big pot?
They can ultimately, they have to sell from the small pot, and there's many benefits within the ecosystem. There's many ways that they can make money. And sorry, I didn't answer the second part of your question actually. So you asked about the liquidity pool. So the second half of that answer is actually, when you're burning supply, you're shifting the liquidity ratio at the same time. Yeah. So if we burn 10% of supply, we shift the liquidity ratio by 1% because it started at 10%. Does that make sense?
Gotcha.
So actually, your liquidity pool becomes a greater and greater share of your overall supply. Actually, it could get too large. In fact, that is also, and we've got mechanisms within the contract to deal with that if that was the case. But ultimately, your liquidity pool becomes, that's why you get this ever increasing price floor, because you've got a reducing supply and an appreciating percentage of liquidity pool of your total circulation at the same time.
Yeah, that makes sense. I'm going to move on to a question that a lot of people are afraid to ask in AMAs, and that is, how does the team, what's the incentive for the team? Like, do you guys get a portion of the initial token set aside, or is there like a reoccurring revenue model for the team, or how does that work, and how do we keep you guys motivated to continue to actively play a role in the project management?
Yeah, it's a really good question, and maybe if I step back a bit, I just want to share a couple of things. So one of the contributing factors, the reason that most DeFi projects fail, is because they start off in the red, basically. And this was also in my musings over a long period of time trying to work this puzzle out. I realised this, and I thought, well, actually, if you want people to go into something and really understand the long-term value, then you can't be in it for a quick buck. So actually, what I thought was, and there's a little bit of principle as well, because at the end of the day, you're selling, you're trying to get investors' money into a system, which is good for everybody. So what we did was we agreed as a team that we would cover all startup costs ourselves, and we would not take a single cent out of the money that was raised. So that when we started the protocol, we didn't start off in debt, basically. We hadn't spent $50,000 on a website. We hadn't spent, we launched 2 websites but before we even launched, actually, we launched our second version of our website an hour before we launched the token, which is pretty audacious. But we didn't take any of the money raised to out of the pot, so that so that the system is really pure. Now, how the team's rewarded, and it's worrying, really, and I plead with anybody that most of our team haven't been paid yet. I put a thank you message in our team chat saying, guys, thank you to the mods, and we'd agreed that most people didn't get paid anything up until launch, and then once we launched and we had some taxes, then we would pay people, just because it not to be fair, the people that were paid out of my pocket, and then when we launched, I put this thank you message and I said, look, anybody who hasn't sent me their wallet address, please send it, and nobody sent me their wallet address. Nobody. So I'm worried that someone's missed that message, but the core team hasn't taken a single cent out of it either. And basically, we've said that what we'll do is we'll wait till the end of May and we'll sit down and we'll look at what things look like, and then try and work out what's fair for the protocol and what's fair for us, and go from there. We have an allocation that is pretty small compared to other projects, so we have no more than, it's less than that now. I don't want to go through old stuff, but we'd initially allocated around about 10%, across all of the founding team members. None of the team were allowed to sell for a long time, and there's also an agreement that nobody will sell into the chart without giving the trust fund first refusal as well. So yeah, it's, you know, I don't think you can say the words make DeFi better and don't sound like some of the arseholes, to be honest, that operate in this industry. You know, if you're going to walk around saying you're trying to do some good in the world, then we thought, well, we need to make some sacrifices to make this possible so that we can really stand by that word.
Yeah, that makes sense. I definitely like that idea behind that, and that you do have that incentive out there, but you're not taking that incentive at the cost of the protocol and all of the investors that you have. So I do really like that, and I think that's a phenomenal answer to that question. A lot of people don't know how to answer that question because they think like taking money out of the protocol or, paying themselves is a bad thing for whatever reason, even though like, you have bills to pay too. So I like how you're very honest about that question. But you
Yeah, and we've also, like, you know, for me, I'm an investor, so I think I said this in my chat earlier, and there was a couple of comments. So to be clear, anything that we invest in the project, you know, if we were to sell it, or when, you know, there's always a point, right? But when we were to liquidate any of our tokens, even ones that we bought with our own cash, post launch, then we would still go through the same process where we offered sort of a first refusal goes to the trust fund. Coordinate, communicate as a team. I'm really lucky because I think there was two big things that I really wanted to do. I wanted to launch this project with a team where it wasn't going to implode with infight in, which I've seen happen to loads of projects. Where you know what, if we'd spotted something that we'd missed and then it turned out that maybe we'd got it slightly wrong and we didn't perform and then this fell apart because there was something fundamentally flawed, and also we've got a team that, you know, will be okay. We'll still support each other. So we've got that, and then we've also got sort of a technical team as well, where, you know, we know who they are. We're not getting devs off a fiver, and we know how they react in difficult circumstances. So I think, you know, it's kind of like the human part of who we are and what we want to do.
Yeah, definitely. I like that. Definitely makes sense. So you guys mentioned
You're,
the Chris, want to go ahead?
I was just gonna say you articulate everything really well, so it's definitely very helpful to kind of see the picture you're painting.
Oh, thank you. I always think if you know, there's this phrase which is one of my favourite phrases, which is if you never lie, then you never have to remember anything again. Uh, and it's yeah, so I'm always happy to talk about this stuff, and I really want to, you know, this is our first one, and I really want to do like smaller AMA roadshows like this. I've got a commercial background, lots of time in sales throughout my career, in various roles, and um, you know, there's such an opportunity investing into our project that, quite frankly, I can't be doing with the FOD of Moon Boys coming in and just going out. I think we need a bit of that, but you always need a bit of that. It's part of the game. But, you know, the investors that we really want are sensible investors who will look at the fundamentals and play the chart rather than, you know, sell low, buy high. And that's, you know, not what we want to do.
Yeah, that makes sense.
So,
What's kind of your long-term vision for the project? Like think 10 years out, where do you want to be and what kind of changes do you want to make to get there?
Yeah, that's a really good question. I don't want to be doing this in 10 years. I'll be completely frank. I'm not going to sell some crap to people. 10 years is a long time,
Yeah.
and if I'm still doing this in 10 years, then the math is wrong, right? So and by the way, I don't mean that as in I've cashed out. So I mean, you know, I think there has to be a life beyond the initial phase. Now we do our kind of fourth phase of the project, which is a bit of a secret. It's called MDB Infinity, and and that is our what happens when you go through the first bump, because there's two things that are really important. I think if and that's the reason we raised the amount that we did at that specific, around about that specific amount, is because we've done the research, and we could see that if you started too small and it's the returns aren't material, And if you start too big, then your curve flattens out eventually. Yeah. If you got, I don't know, 200 million in a trust fund, your investment opportunities start to get a bit more limited, perversely, right? So there's we're going to go through that process. There's a phase, MDB Infinity is about then creating this system that is systematic and keeps repeating the success over and over again, and it gives the back to this really powerful relationship between people. It gives the people that already were there in the last phase first, so it's fair, first sort of ticket to the next phase, but they don't then get a ticket to the phase after that. It's not about compounding wealth for a few people, and then the new people that came into that next phase and were early then get the benefit. And just so I think $1 Million Baby come from because we had this dream that rather than putting $20 million into one person's pocket, what we wanted to do was rather put $1 million into 20 people's pockets and change 20 families' lives. So that's, we always want to run a system that creates wealth that is fairly well spread. Not, we're not communists, but there isn't, like I say, 20 million in one person's hands.
Yeah, that really makes sense, and I like that you're definitely doing it mathematically in a way that makes sense for everybody that's participating in the ecosystem, not just the people that are getting in on that first day and can really be the only ones that reap the benefits, like you see with so many other projects. Like you mentioned with a token going up 100x, then you look at who actually made money off of that, and it's only a few people making a ton of money, and everybody else is just losing money. So I really like that it's all thought out to be fair for everybody.
Exactly. And by the way, everybody in our pre-sale paid the same price. Everybody. We even got a couple of messages afterwards saying, "Hey, wasn't I meant to get an extra discount?" I was like, "No. Like, we don't. There isn't a shop window here, and then there's some funny stuff going on in the background. If you put in $500 or you put in $20,000, you got the same price." And that's sort of one of the principles that we stuck by.
Yeah, that makes sense. So then what's kind of like do you have any future utilities planned for the token? I know you mentioned you're going to roll out with staking, and are there any other features that you have on the roadmap right now?
Yeah, I think it's there's a lot of people here that have been in a lot of my AMAs. Actually, it always triggers me, that question, to be honest, because finance is a utility. It's regulated for a reason, and it's really important for countries and society to run. So our first and foremost utility is finance. The second one actually is community. So we deploy something we call it socioeconomics, which I mentioned before, which is about leveraging the power of people using investments. So you create this compound effect. If you can invest $20,000 into a token that has a community of 30,000 people, and 200 people come and buy $500 worth of your token out of that, which is a pretty small conversion rate, then that investment has paid for itself and you still own the investment. So that is a really big part of our strategy. Also communities, so we've got the Millionaires Club. So the Millionaires Club is an open club at the moment, which is basically the community. It goes exclusive very soon, in the next few days, we hope. And we'll have lots of investor pitches. So in the future, we would, we've got maybe 2 or 3 projects pitching to the Millionaires Club in the next few weeks. We're very lucky that because we don't rely on Pontonomics, we're like the opposite of that. Then we don't have to lock our investors in. We don't have to treat them like prisoners. So we can, if liquidity leaves us, then the people that are left behind are stronger. So we're not afraid. So we've got this Millionaires Club where people can pitch. There'll also be rewards in the Millionaires Club. You get special investment opportunities. So bonds will only be available to the Millionaires Club for a period of time, and in addition to that, there'll also be further investment opportunities. So I think probably want to see the market looking a bit healthier, and we want to demonstrate some decent growth, but then there's these other financial mechanisms that will be running that only the Millionaires Club can partake in, and also there's a whole sort of like people element as well. So we've got we just agreed a contract with a fantastic sort of life coach She's going to do a monthly session for the next 6 months, also have her own channel in our Discord. Investing is very stressful. Crypto is 10 times more stressful. and so we want to invest in people and activities that help the people in the community as well, rather than just trying to, like most projects, just about trying to get people to buy for the sake of buying.
Yeah, I like that. It's definitely something I've never seen in a project before. So that's really cool.
I think the only other, sorry, go
I
on.
was just gonna say, I was literally gonna say, Chris, do you have any other questions? And then also for anybody in the audience, if you guys want to ask any questions, the AMA questions text channel is open for you guys to ask whatever you'd like.
Yeah, so all I was gonna say is that reminds me a little bit of Flip or Excel and their whole deal with education and how much of a priority they made it there. So I do like that piece. Just the fact that she has her own channel, can do like whatever, present that information, because a lot of people don't know where to start, and that's very helpful.
Yeah, giving back to the community is definitely something that I think would even help the project much more in the long term, because you're gonna have a
Yeah,
stronger community as a whole.
it really helps you negotiate as well, actually. So it kind of takes the emotion out of any sort of purchases that we make. So I'll give you an example. Like, for instance, one of our larger purchases recently, we got the price down 80%, because, like, look, guys, and I think maybe there's a little bit of, oh, you guys have just raised 1.8 million. Like, that's not my money. That's not mine. I can't just go throwing that around. And actually, if I spend that money, I need to be able to stand up in front of people, and answer questions. So it was a fairly big purchase, and yeah, we managed to get it down 80%, because it's a community project. It's about helping people, and yeah, that makes it much easier, actually, as a leader with the project, to do business.
Yeah,
Yeah, I
definitely.
like that.
You haven't asked about gravity. Maybe you don't know what gravity is.
Yeah, go right ahead. Explain away.
Yeah, sorry. There's probably so much, isn't it?
Yeah, there's a lot to take in, but
Yeah, the white paper, I think, is a good read, so I'll definitely give it a look. But um, so what gravity is, and I've been in various projects myself, and I think, like, one of them I was in. I don't know if you guys invest in Titano, or did you invest in Titano? You don't have to say your investments, but you know what Titano is, right?
yes.
Yeah. So the first Titano for Palace, I was in that, and that rugged. I got out most of it, actually. I think I left like $1,000, and I was like, "Well, if I'm wrong, then let's see." Now that's dead. Obviously, that's gone. But it rugged. I could kind of smell the toxic fumes, um, and what I found really odd was that they just left the liquidity. Just left it. And then I started to do a bit of research in the industry, and what I basically learned is that, sometimes people leave the liquidity because they've locked that in to try and take the money out somewhere else. But I also learned that actually it's an unregulated space. People don't need to pass a course to launch a token. They just need to be able to code and bullshit people, basically. And quite often and I'm learning from the experience. It's a really pressured environment. It's a tough job, and if you're not very mature, and it's a massive gamble, because pondonomics are just a massive gamble, and a lot of projects just don't work out. 99% of projects fail. So, there's kind of these options, right? And that's when I could imagine there's these young kids who had all these hopes and dreams, and they're 2 months in, and they're like, "What do we do?" And a lot of them have got a choice. They either just can't go on and they disappear, or they turn into criminals, basically, and they steal the money. And I thought, well, what if there was another way out? And there's this perverse situation where in a project that's failed, actually the liquidity pool ratios are much stronger than a successful project in most cases. Um, so so we launched Gravity. So with this whole make DeFi better, Gravity, it's a bit like when two celestial bodies come close together, one pulls the other one in, and I think of these projects sometimes as like sort of planets that have lost their atmosphere, but there's still a lot of goodness at the core. Sometimes it's team members, sometimes it is always the community, and the investors at the end are probably the investors you want the most, rather than the ones that at the start of the project, just trying to flip and get out as quick as possible. So Gravity offers a different way out, an orderly way out, and then what we do is we trade our tokens for in a ratio to be agreed based on the numbers. And just literally 48 hours before our launch, I was absolutely delighted, because I think it's really important to walk the talk, and we were able to do a deal where we were able to start the acquisition process of Vault DeFi, which started off as safe Vault, went through a couple of iterations, management changes, and so we've started the acquisition process of 2 tokens with 7,000 holders, 250,000 in liquidity, and we're absorbing some fantastic community members. Some of them I can see here who are already a great contribution to our journey, and we get to do a little bit of good in the space, and that's what Gravity is.
Interesting. Yeah, because can you explain a little more about the specifics of how that would work with someone?
Yeah, so let me give you an example, right? So,
Mm-hmm.
you come across, let's use the space analogy. You've got this planet hurtling through space. You come across it. There's very little life on the surface, but you look into it, and it's got 100,000 market cap, say for instance. It's got, $40,000 of liquidity. The team have reached, the end of what they can do, and it's always difficult, right? It's that's why I use the term like a planet, because if the atmosphere left the Earth, it's never going to come back, right? Once it's lost to space, it's really difficult to get it back. And I think, crypto projects, unfortunately, are like that. They do reach a point where it's really difficult to return, and ultimately what we do is we sit down with the owners, and to be fair, we've talked to maybe 8 to 10 projects so far. We've only been able to find one project so far that had a leader with humility, compassion, and was able to go down that journey. The biggest barrier I've found is the people running the projects, actually, who want something for themselves. They don't want to accept defeat, or it feels like a defeat rather than an opportunity for success. And then ultimately, based on, it has to work for MDB, and it has to work for them, and it has to be a win-win. And then we'll cut a deal where they receive MDB tokens, depending on their size of holding, and they're able to transition over to our project, and then we absorb, if they have a treasury, we'd absorb their liquidity. That also then obviously gets pumped into our own liquidity, which burns supply and also drives up the value of the new token that they're now invested in.
Interesting. So is there anything preventing them from doing that on their own, or?
Well, I suppose when you say preventing them, what, just selling and buying MDB?
Mm-hmm.
No, there's nothing at all. But I think
Okay.
quite frankly, often we've all got them, right. There's stuff I've got in wallets that I think, oh yeah, I own some of that, because it's just down so much.
Mm-hmm.
You just move on emotionally, right? And I've got a few things like that, and also it offers this different opportunity, right? Because if you, that example I used, as soon as people start selling from that 100k market cap, we had it. There was a project called POS. I don't know if you guys know that project, which was also a FTM Titano fork, and I went to their team, and they were about 105k market cap. Tried really hard to get some dialogue going for about a week, and then they said, "Oh, we've got a big announcement coming." I thought, okay, well maybe they've been working on something else, right? Because I could see the community just suffering, banging their head against a brick wall, and their announcement was, "Oh, we're going to shut it down. Here's a couple of votes on how we're just going to, send you the money." Well, the problem is, because the way Pontonomics works, people are getting hurt. They're like realizing a big loss, and maybe it was good for them. I don't know. I wouldn't want to speculate, but ultimately they announced this. Sales started flooding in because people think, screw you, I want something out of this before the next person, and before you know it, they were down to 40k market cap.
Mm-hmm.
And and the guys, to be fair, maybe the way I went about it, there's a lesson there, because I was really frustrated that they wouldn't do the right thing by their community, but they didn't even want to put MDB as an option, because I think, I won't speculate, but they had their reasons, and their community were asking for it.
Yeah, I definitely think that's an interesting way to go about, kind of turning a lost cause into something that at least, there's a win at the end of the tunnel, right? So
Exactly.
that's really cool that you guys are thinking in that way. I haven't heard of any project or any kind of service that does that too. So you guys are definitely thinking outside the box, and that's really cool to,
Yeah.
really
I think
enlightening to hear.
I think a lot of what we do as well is like, I suppose where it starts from is that we haven't thought how can we make as much money as possible. We've thought, oh, that's a problem. That's not good. How could we help solve that? And that basically, that is MDB, that is gravity. It all comes from us sort of seeing these problems and trying to think about maybe ways that we could help make it a bit better and
Yeah,
make
I
money,
like it.
right?
Yeah.
And let's be honest, we want everybody in the protocol to make money at the same time.
Yeah. Looks like we have a few questions from the audience, so if we want to jump right into those, we can.
Yeah, definitely.
All right. I think this is going off of my question of where do you see yourself in 10 years with the project? And he says, so in 10 years, someone else will take over. I guess what's kind of your plan then to kind of leave the scene and keep it growing?
Jesus, I remember when people used to say in SafeMin, "Oh, I'm just gonna delete it from my wallet and come back in 2 years and I'll be a million." Jesus Christ, that's like centuries in crypto, right?
Yeah.
Um, so at the end of the day, we're not going to do all of this, and I think it's like in the nicest way possible. I don't think it's relevant what happens in 10 years. I think 99.9% of people, um, you know, it's. I think what we have is we have the opportunity to build something that's sustainable, that's mature, that's bigger than me, right? And it's about MDB. It's about it being a mature organisation that can go on, is sustainable, and makes people money. And there's always a benefit of being early, obviously. And I think, yeah, probably maybe to answer it much more constructively, I think the right outcome in 10 years is that if it's right for me to be doing it in 10 years, then great. Regardless of, this shouldn't be like it's not a vanity project. The MDB is a machine, should be sustainable, and maybe even we're exploring a couple of options around how decentralized it can become as well. But I think there's a lot of learning we need to do in the model first.
Yeah, makes sense. Kind of getting to that point where you almost aren't needed then. So it's like even if you were to leave versus stay, that it wouldn't really have an effect. Is that kind of where you're going towards?
Yeah, exactly. And I know why people ask the question because they think, "Oh, am I going to invest in this?" And then they're going to disappear. This is
Yeah.
this is my baby. Excuse the pun. I'm not going anywhere. This is a life decision. But we're all humans, and we all have a limited time on this planet. So nothing's forever, and our goal is to ensure that MDB lives on beyond anybody that's involved.
Yeah, I definitely like that vision. Next question is from Seaward Mule. He says, "Do you all plan on having a type of DApp for the coin?"
Absolutely, yeah. We're not being very honest. We're not. We're not. We've got really good devs, and we've got some great technical people within the team. But in terms of, we definitely go with it. If we can outsource it, we outsource it type model, um, and that's because we want to focus on the things that we're really good at and get very clever people that are good at the things that they're good at. So apart from anything around that's very sensitive, like contract and things like that, absolutely, there's no external sort of liabilities there. But if it's like, the apps make me nervous, to be honest, because as soon as you start connecting with someone's wallet, just because it's nice to see on the screen with our logo on it what you can see in your own wallet anyway, it's, yeah, I think D apps are a little bit have a little bit of vanity to them. But I think because of the way our ecosystem is developing, then a D app becomes much more logical in our world. So there's absolutely a plan to do that.
All right, sounds good. Blue Flame 12 asks, can you please explain in more detail how having a high liquidity backing ratio will help the price appreciate over time? I understand it's great to have enough liquidity so the price is more stable, but how does that help the price growth?
I'm struggling. I'll be honest. I'm struggling a little bit with the question because I think it sounds like there's kind of two competing things within the question. So a large liquidity pool as a percentage of your overall supply provides more stability, right? But having a small liquidity pool from a ratio perspective versus your trust fund means that you've basically got this never-ending insurance policy. So you can be very ambitious because the curve potential is exponential and huge, but you can also go through that process without. But I've said many times in AMAs, I wouldn't be able to do this if I could go to bed with a chance of waking up in the morning and it's 90% down. Now, the only way that can happen is if it gets way too hot, and we won't support it if it gets way too hot. We say very clearly in our white paper, we'll always encourage sustainable growth. And yeah, that's the if we went times 100 in a week, then there's a chance I might go to bed and wake up in the morning and it's down 70%. But that's why we want to educate our community so that they take profits if it's up times 100 in a week, and when it is down 70%, then they understand the protocol and they look at the ratios rather than just looking at the chart, which is just an illusion at times, and they follow the fundamentals rather than the chart.
Yeah, I definitely think that makes sense. So essentially, just having the higher backing allows you to have more funds to buy back into the liquidity once, if that were to crash a bunch, then there's that, well, you can just buy back the liquidity and the price will be
Yeah.
back to where it was. On top of
Yeah,
that,
exactly. Yeah, there's a scenario that we ran sort of pre-launch because a lot of people raised the question. They said, you've raised a lot, you get a lot of dumps, and I won't name names. But I could reel off like 5 projects that have launched recently. That it's just the charts a car crash. And like, don't get me wrong, there's some things that we definitely could have got better. So I'm not pointing fingers. But in terms of like the absolute minimum of what we wanted to achieve is some sort of floor and stability to the price with big upside potential, and I'd say we definitely achieved that. And that's because you've got those ratios in place. So the scenario we ran, if the price had dumped 50% off of launch, buying back, there's a marketing sort of piece that we put together. We could invest 120,000. So the first mega buy potential was 191,000, which is a combination of 5% mega buy, and also we had sort of Vault acquisition. So Gravity, projects offer sort of like short-term capital injection possibilities as well. So we had about 191 that could have been injected at any point. Now, if we'd been in a position where the liquidity was down 200%, if you put in liquidity was down 200k, if you put in 191k, you would burn so much of your supply that everybody would be better off after that event has happened, and then the ongoing growth curve from that point with your now much more limited supply would be even faster because you'd had that crash and that bounce back.
yeah, I think that answer hits the nail on the head. So makes sense to me, at least. A follow-up question from him is, what is a rough estimate to how much of the supply you believe will be burned in the first year?
We have a goal. So our goal, and now we can be quite bullish on this because of the reasons that we talked about before. Our goal is to burn at least 1% of supply a week on average. Might not burn any for a couple of weeks, and then we might burn a lot, but our goal is to burn at least 1% of supply on average per week. If it was really bearish, then we would burn a lot more, and if it's pumping really hard, then we'd obviously not contribute to that pump and burn a lot less. So either way you win, right? You've got ridiculous burn rates or you've got big price appreciation. but you basically got both happening together over time.
Yeah, like makes sense. Kaner asks, how will MDB holders follow Phoenix signals system via dashboard or any tool?
Yeah, so we have a status, which is updated on the website, but it's also very clear. It's talked about. It's not something that kind of flips on and off by the minute. We'll learn as we go. So if it's in the white paper, actually, it actually tells you. It says, if the trust fund is over a certain percentage of market cap, which I think it's 20%, and we're like 60% at the moment. So if the trust fund is over 20% of market cap, then Phoenix will be unlocked, and the probability of a buy is very high. If it's between 10 and 20, then probability of a buy is possible, not extremely high, but definitely possible. If it's under 10% of market cap, so if our market cap was 30 million and our trust fund was 2.5 million, then the Phoenix wouldn't be unlocked. It's a subtle way of saying, make some profits, guys. Get ready for a dip. Because that supply is really precious. There's no minting going on. Once it's gone, it's gone.
Yeah, and then is the Phoenix, like, is that just somebody on your team going in and buying through the trust fund wallet, or is that like an actual something that's coded into a smart contract that automatically buys at a certain randomized rate depending on the market cap ratio?
Yeah, we've looked at those systems. I think probably after our launch as well, we're even probably more nervous at writing things into contracts. So we want to play around with a couple of models, and this is a new model, right? And capital synergy, the Phoenix, it's all something that I haven't seen in its form, and so we need to test it out a bit and learn. At the moment, we wouldn't know what to write into the contract. Let's be honest. What we do know is logically that you do want to consume as much supply as possible, and you don't want to pump a price unsustainably because it hurts people eventually. So, that's the logic that drives us.
Yeah, interesting. That does make sense, and I agree with you. I've not seen any other DeFi model similar to this, so definitely pioneering the space of something that could potentially be like another Olympus or strong nodes where they're forking this like crazy, but you guys are definitely the original, so definitely cool.
You guys are, your Discord server and community kind of shows that for itself. But yeah, you guys have brought some new utility into it that's very, very interesting.
Yeah,
to say the very least.
We I think we're very lucky in the position at the moment. We're putting a lot of effort over the next week because I think we're probably the most undervalued project around at the moment when you look at our fundamentals.
Yeah. Well, we are getting close to the end here, I think. Chris, I don't know if you had any other questions, but it looks like the chat questions were all answered. So, yeah.
No, like I said, I think we'll call him the Godfather for right now, but I think you answered everything I kind of had, and you articulated everything, like I said, very well. So thanks for coming on.
No, thank you. And I don't know because I try and keep my eye on this. I don't know whether many of your community look at that. We're under launch price again. Obviously, BNB is down a lot, and we did burn a bit of supply, but yeah, it's just ridiculously undervalued at the moment. But I don't know whether many people came in and tried to win the $50. So I have a question for you guys actually before we end, if you don't mind.
Yeah, of course.
What's the average profile of the people within your community?
Could you elaborate a little bit more on what you mean by average profile?
Yeah, so what type of investors are they? What sort of things do you normally look out for?
Yeah. So, what I look for in a project would be strong fundamentals, a strong team that provides those fundamentals, and overall just like no red flags when it comes to BS things that might happen in a rug pull. And then also different meters of like hype. If a project is super hyped up, then there's obviously a greater chance of seeing a return on your investment, especially if you got in in on the whitelist or a pre-sale, whatever you want to call it. Then I try to kind of teach people what to look for in projects. And for now, our community consists of everybody that came in to listen to different AMAs, and then also some from our YouTube channel. So our community is really pretty broad in terms of what they look for. So we have a little bit of the DeFi degens, and we have a lot of people looking for long-term plays, and everybody in between there too. So a little bit of everybody.
Yeah, I'm a little bit on the other end, and we have Cole that looks into a lot of the smart contracts that we kind of go through. But I'm more on the end of, I mean, I've only really done until semi recently long term investments. So more looking at really what has really big use case, and so that's always something that I find really important, like what the innovation is to each project and what kind of new things they bring into the space. Because I think the worst thing is when people have, when you have 50 competitors, it's hard to guess which one is going to be this, like, is going to succeed. So I look at the different groups, different projects that kind of bring something new to the scene. Because even if someone copies them, you already know that they're looking into developing something even newer.
Yeah, I think that's well said.
Sorry, I was on mute. Yeah, fantastic. No, look, I yeah appreciate that, and appreciate you guys having us. Yeah, look forward to hopefully seeing you in the chat, and seeing you come on this fantastic journey that we've got ahead of us.